It seems like everyone likes to talk about real estate and real estate investing. I think it's because it's something tangible, something we can all see as we drive around, walk around. We see homes, we see apartment complexes, we see commercial real estate. It's something we can grasp.
We know a lot of people that want to invest in real estate or are investing in real estate, and we have a lot of clients that are doing the same.
So what does the real estate market look like today?
We know experts in the real estate field, and we have spoken at multiple real estate investment seminars. But John, you're the one on the team who has most recently attended real estate investors meetings. What are they saying?
Something that I found interesting is that there's a big emphasis on private lending right now. And part of the reason is because they're not finding the returns that they used to. And then I saw a poll that one group did that has about 900 members. They said that 50% of active real estate investors are not doing the deals that they want to do. They want to do the deals, but they're not doing them because the numbers aren't penciling out.
So the numbers that are penciling out, that's called the cap rate in real estate. So let's talk about what the cap rate is so people understand that.
So the cap rate is figured if you take net operating income divided by the fair market value of the home. Now, what is net operating income? Net operating income is going to be all the rents that are coming in minus the expenses of running the property, but you don't include in the expenses the mortgage or the interest on the mortgage. So you basically take that out of the expenses. That's your net operating income. So it's what is your cash flow before paying the mortgage and then any financing arrangements.
And ideally, that should be about 7 or 8%. And right now, it's around 3 and 4%. Is that right?
3 or 4 or 4 or 5. Yeah, those are all low cap rates, especially when you consider the interest rates are so high. Cap rates tend to go up with interest rates. Well, interest rates are up right now, but the cap rates haven't come up accordingly. So that's why I think there's a lot of people talking about private lending right now, because they can make more by doing a private lending arrangement than they can by actually owning the property.
Sure.
So it's a time that a lot of investors are trying to take some money off the table. If they have a lot of equity in their properties, if they can find a buyer, if they can find an investor who's going to buy it, might as well do some owner financing on it.
So one of the things I notice when we go to these real estate seminars is that I think people in the room think, oh, everyone else is doing these real estate deals and they're doing everything that's being talked about, when in reality, a lot of people sitting there are in the same position that first-time attendee is in. Maybe they've been to a lot of meetings, but they've never actually bought a property. So before we start thinking that everyone knows what we're talking about, John, I want to ask you to tell us a little bit more. What is this private lending? What is it?
So sometimes an investor that owns a piece of property will sell the piece of property and they'll offer owner financing on it to whoever is buying the property. That's often another investor in the real estate investment circles. So if they can find an investor who's going to buy the property, they can offer owner financing on it. They're going to charge an interest rate on that, and then they're going to earn the interest on it. Private lending also takes other forms. There are companies that that specifically raise money from investors to go and invest in private lending, and they're going to finance the deals that these other investors are doing. They're going to charge the interest rate, they're going to take a fee, and then they're going to be the middleman so that the other investors, it's more of a passive investment for them.
Are you talking about a REIT now?
It could be a REIT, or it could be some sort of registered security that they're doing it.
Okay, again, tell us what a REIT is.
A REIT stands for Real Estate Investment Trust. Now REIT's typically going to go in, they're actually going to own the properties, and they're going to pay out a dividend based on the cash flow of those properties. So a REIT's typically going to own the properties. An investment that's doing private lending, it's going to be typically registered a little bit differently at the state level.
So people can get involved in real estate investing in different ways. They can be actually making the investments themselves. They can be participating in private lending, where they loan it to an institution or to an individual who then is making the investments. Or they can participate in a REIT, which is owning the properties, but they just provide the financial backing.
Yeah. What I've been feeling at these real estate conferences is the undercurrent what the big guys are doing, the people that are really doing something, they're more interested in the private lending side right now than they are about actually owning the properties. And I found that was interesting, just because of the situation.
And I think that's what we see at all of these real estate events that we've been doing for years with people, is that you may get into real estate because you want to fix and flip.
Sure.
And you end up not being able to flip and you become a landlord. And this is true throughout life. We have to be able to learn to pivot. Whatever your idea about getting into real estate right now is going to change over time because the market changes.
Mm-hmm.
And we have to be able to adjust to that. Otherwise, we're going to be left behind. One of the reasons that we hear, and probably the biggest reason that people want to get into real estate, is they want the passive income. So what is passive income?
And is it always really passive when you're in real estate?
If you're having to pivot all the time, it's not real passive.
It might be reported as passive income on your tax return, but that might be about it.
Yes. And if you're actually, if you own the properties and you are actually managing them, they called people in those positions doing toilets, tenants, and trash because they face all of those things and they are quite active in taking care of all those things. Sometimes the property requires more maintenance. Sometimes it's actual maintenance where the roof is leaking or, different things need taken care of. Sometimes it's a property where maybe you have frequent turnover with tenants. Maybe it's the location. Maybe it's the market of where it's at. Those are all things that you have to face as a landlord.
Yeah. So as we're looking at the real estate space right now, maybe it's not the best time to get into a new deal in the real estate market, but it is an excellent time to be building your liquidity. So for our Infinite Banking clients, continue paying your premiums and accumulating your cash values. Or if you have outstanding loans that you've taken to buy other properties or to finance other expenses, be repaying those loans, build your liquidity so that you have the cash to do a deal when it does come along and the deal is looking good.
You were talking about the things that we need to be aware of. There's a lot of things that are uncontrollable in the real estate market, just like any other investment. And some of the things that we hear frequently are you buying property that's in an HOA? Now you've got government regulations and you've got home organization regulations that you've got, and maybe that property wouldn't be very good if you're going to fix. It might be fine to fix and flip, but you don't want to be a landlord in that HOA because the HOA might say you can't be a landlord and have property in that area. The other thing is that there's natural disasters that happen. I remember talking when Katrina hit the Gulf Coast with a nasty hurricane back in the early 2000s. And there was a lady that her and her husband were term life insurance salesmen. They worked for Prime America, and they followed the advice of Prime America to the T. They bought
term and invested
the difference.
That was A.L. Williams. He was adamant about that.
And A.L. Williams started Prime America, and they followed his advice. They bought properties from Houston all the way around the Gulf Coast to Tampa. And Katrina really devastated them. They were pouring money into fixing those properties up that they never expected to. Not much passive income coming in at that time.
No, and where are the renters?
Well, and the renters didn't want to come because the properties weren't fixed up. And all of a sudden, they got them all fixed up. And then BP decided to have an oil leak in the Gulf, and all the beaches were sticky, gooey mess, and nobody wanted to rent their properties after they had put all that money in them. So those are kind of like acts of God, things that we can't control, and they happen fairly frequently, depending on what part of the country you're in. It can be a sinkhole in some part of the countries, or it can be,
a wildfire.
A wildfire like in Palisades in California, or it can just be that your neighbor decides to buy 10 pit bulls and let them run loose on the property. That devalued, or maybe this, through eminent domain, they decide to build a school 2 blocks away. And now your property values have devalued. So those are things we can't control.
Right.
And that's why it's so important that we build a cash reserve somewhere where it's very liquid, like in Infinite Banking. And that's what Nelson Nash found out that he should have done at a higher pace than he actually did so that he could get out of the real estate mess he had found himself in.
Yes. So those acts of God, we can't live out of fear of those things. They do happen to all sorts of properties all across America all of the time. But there are other events that are widespread, and we're seeing some of those right now. If we look at cities like Charlotte, Atlanta, Tampa, we look across the country a little bit to Dallas and Houston and Phoenix even, we're seeing a lot of people that are hanging on to their homes when they would have liked to sell. They tried to sell them, couldn't get the prices that they wanted. And so rather than cutting the price, they decided to go ahead and hang on to it as a rental property. These are called accidental landlords. And the rates for accidental landlords have gone up significantly in these cities. I think the average is about 20%, but in places like Dallas, it's 32%. And places in Houston, that is up 41%, the number of accidental landlords that you have there.
So that's driving down the price of rents too. So they're not even getting as much out of their rental as they would have liked to have got.
Right. So yeah, because you have all these additional homes that are for rent, but you can't buy because people aren't ready to sell because they couldn't get the prices that they wanted. So it hasn't affected the prices as much, even though prices are down. I was preparing for this podcast and I found here that half of the country has entered correction territory in real estate prices. But it's a different type of correction than what we saw 2008, 2009 area. Back in September of 2009, you had 23% of homeowners were underwater on their mortgage. That means they owed more on the mortgage than the home was worth. Today, we only have 1% of homeowners that are underwater. But part of the reason for that is because they put down such a big down payment. Leading up to 2008, 2009, you didn't have to put hardly anything down. And so it was much easier to get underwater when the real estate prices came down. Now people have a buffer. So the prices of real estate have come down, but they still have the buffer because they had to put 20, 30% down. And so they have that buffer. So they're not necessarily underwater on the mortgage, but still, yeah, in Cape Coral, Florida, there's 7% of the mortgages that are underwater. And in localized areas, Austin, Texas is another one, there's about 4% that are underwater, even with those down payments, the home prices that they're seeing.
In one way, though, it's actually worse for the people today that are underwater, even as 1 and 7%, because they have so much of equity tied up in that property.
Their own equity.
I was thinking that they got the same.
That could explain why they're holding on to these homes and trying to rent them out and hope some of that comes back.
Here's another issue that's coming up. A lot of people get into the real estate sector with Airbnb, and they buy a home and split it up, or maybe they don't split it up and just Airbnb it. And now different communities around the country are saying, this isn't a house anymore. This is not a single resident dwelling. This is a hotel. And we're going to assess taxes on this as if it was a hotel. And now those Airbnbs are not being as profitable or not profitable at all because they have to pay these extra taxes.
Yes, we've talked to investors who have been selling out of those and maybe even not selling at quite the high price that they wanted because of what the next person is going to be facing as well.
This is something that we noticed happening in Las Vegas when we lived there, and then I heard somebody else talking about it the other day too. That is happening in Florida. When you go and book a room at a resort, the advertised rate is not the rate. You got taxes and fees on top of that. This guy was he gave the numbers for the taxes and fees when he booked a vacation in Florida. The taxes and fees added another 46% to his price. On top of the advertised nightly rate.
When we get back from the break, we're going to talk about how infinite banking can help you balance the risk of investments, including real estate investments.
This is the Infinite Banking Made Simple binder. Everything you need to know about infinite banking in one spot. And it's a free download. Answers to the top commonly asked questions like what is infinite banking, how does it work, and how much does it cost to get started are answered right here. You'll find the step-by-step diagram starting on page 7 and the investment comparison on page 8. This Infinite Banking Made Simple binder is a free download. You can click the button to get your copy. At McPhee Insurance, we believe infinite banking has become too complicated and confusing, but it shouldn't be. And that's why we created this binder. Infinite banking is simple when you stick to the essentials and the facts. And the people who put it into practice get results. Don't let insurance terms like modified endowment contract, 7-pay test, direct recognition, and paid-up additions keep you from understanding infinite banking. Download the free binder and see how infinite banking can work for you.
Nelson Nash, the author and developer of the infinite banking concept, found himself in the early 80s owing a lot of money on land that wasn't productive. Interest rates at that time, prime, were 21%, but Nelson used to joke, I wasn't prime, so I was paying 23%. And he thought many times, how am I going to get out of this mess I've got myself into? He said he went to the real estate experts and they said, well, just sell the property. And he said, what fool would buy it at those interest rates? And then it dawned on him one morning, early in the morning as he was on his knees praying to God, how can I get out of this mess? That his brother had sold him life insurance policies 25 years earlier that had lots of cash value in them, and he could get that money between 6 and 8%. Life insurance, as we develop it and sell it here at McPhee Insurance, is a place to store money that's liquid and is ready for emergencies or opportunities that come around in your life, whether it's real estate investment or helping you balance the risks of owning real estate.
Yeah, and there's many ways that people use infinite banking when they're investing in real estate. One of the most common ways is that they use a policy loan to leverage their cash values and to fund the real estate. Maybe they use it to help with the down payment or with help with the repairs. It depends on the type of investment that they're making. That's one way that they can use it. But there's also a way to use it in real estate investing for your cash reserve, because so many people in the real estate space, they're trained to think in terms of leverage. How can I get the most leverage out of this? Leverage one property to buy the next, the fact there's a popular model for this that's called you buy, you refinance, or you rehab, you rent it out, and then you refinance. Sometimes it's called the BRRRR method. And then you go and you do it to the next property and the next property. That sets up a situation with a lot of leverage.
Well, and a lot of times those real estate investors are very cash poor.
Yes, they are. And when you have a lot of leverage, one thing goes wrong, and that leverage can work against you if the market conditions turn out that way. So one thing that infinite banking can allow you to do is to keep extra money in your policy. There's cash values that you don't take a policy loan against. That helps you to balance the risk that you're taking with the real estate side of the portfolio. If you are doing some leverage, it allows you to balance that risk out, because whenever you have leverage involved, the risk goes up.
I also think about the people who are buying a property and thinking, oh, my tenants are going to pay the mortgage on this. Well, that's
Sure.
a great plan, great idea. And many times it works. But in 2020, it was declared that renters did not have to pay rent because of the financial difficulties people were facing. We know of a case in Las Vegas where a man had several rental properties and he actually lost his own home because his renters were not required to pay rent and he couldn't even afford to pay his mortgage. So he lost his home. So having money stored in your life insurance policy can give you a cash cushion so that if your renters don't come up with a mortgage or they're facing financial difficulties, it doesn't put you in a bind. Or maybe you're between renters for some reason. It doesn't put you in a bind to not have the wrong renter. Quick, get a live body in there to make that mortgage payment.
One of the techniques that we hear often when we go to these real estate events and speak is someone is there speaking about self-directed 401ks because they want to sell a 401k to these real estate investors so they can build up money in that 401k, and then they can leverage the 401k and invest in a fix and flip or a rental. And that's a viable and doable thing, but it works so much better if they would use a life insurance policy. Because with the 401k comes some government regulations. You can't do any sweat equity in that property that you're financing with your 401k funds. You can't
That
lease
means that means you've got to hire it out and pay
Another
higher
expense.
expenses, even if you could have done the work yourself.
You can't live in that property. Neither can anyone that's affiliated with you or related to you live in that property. So now you've got extra expenses marketing who you're going to rent this property to if it's not a friend or a relative or somebody like that. So those 401ks do work, and they work exactly how they're said, but the limitations on them, you don't find that with money that is stored in a whole life insurance policy. The other thing is when you borrow from your 401k to do this, the money that you borrow out of that is not earning any growth. When we borrow against our life insurance, it doesn't stop the growth of the policy at the same time. And so there are some huge advantages to using infinite banking over a 401k if you're a real estate investor. And that's why we get asked to speak at these events so frequently.
Another thing that infinite banking allows you to do is it allows you to put cash away for the next investment. 401ks, IRAs, they have limited contributions. A life insurance policy does not have limited contributions. You can pay a premium for whatever you want to build up the cash value in there. If you've made previous deals, you've taken policy loans out of that, you can dump extra cash back into that to repay the policy loan, which works wonderfully in times like these when you may not be finding the deals that you want to enter. You can build up some cash so that you're ready for the next deals that are coming along.
And the other thing that happens with life insurance is it helps pave the way for the next generation. Let's say that you die owning real estate that has, costs still associated with it that is not paid for. Well, the death benefit of your life insurance is going to help whoever inherits that property to continue and manage those properties for a while and not be forced to sell them in a fire sale just to get rid of the expenses or the taxes that are owed on them.
And if you're a real estate investor and this is not the time to buy properties for you, what if you've sold properties? Where are you going to put that money? Well, we've helped many clients buying policies that they can put that money into. They know that the money will be accessible to them. But when they're not finding deals right now, or maybe they're getting out of real estate market, they have a place to put that money where they can access it, but not have to be using it, and they still get a guarantee on it.
I'm thinking of Steve. He wasn't a real estate investor per se, but he had a beautiful house on the golf course. And the 500-year flood came through North Dakota, and it wiped out all the homes on that golf course. The insurance money is going to pay, but insurance money doesn't pay right away. In this case, they condemned the homes, but they wouldn't condemn them until after they had been restored to their previous condition, so that the owners could get the insurance reimbursement. Then FEMA came in and condemned it, pushed them over with a bulldozer. But that put a lot of Steve's neighbors into a bind because they went and lived in apartments and they put repairs on credit cards while they fixed up their homes and to get the insurance payout. Then they got the insurance payout, they could go buy another home because their original one was condemned. Steve had options though. He had built his life insurance cash values over the years. He was able to take out a policy loan. Him and his wife were in a new home in about 2 weeks, I think he said. Then he could take his time. He could use some of those cash values to even help repair the old home. So he wasn't having to put the repairs on the credit card. When the insurance reimbursement came back, he could pay off his policy loans. And now he was in a much better financial situation than the people that put the repairs on credit cards and had to rent an apartment during the times that they were repairing their homes. I don't remember how long that time frame was.
I think it was 18 months.
18 months?
Yeah, so
that's
some
significant.
of them, and if they had paid rent somewhere or apartments, whatever, that was a huge loss, financial loss to them if they could have just gone and bought another home.
And many of those neighbors of Steve had to buy a house that wasn't equivalent to the house that they lost in the flood because of their credit card debt and the expenses they had in renting during that time. So Steve actually took a step up because he had the availability of liquid cash value in his policies to do what he wanted to do. He wasn't bound by some governmental regulation. And It makes a huge difference.
So infinite banking really helps you with whatever you're doing financially, whether it's real estate or not real estate. It gives you an edge that helps you ride the market, ride through life, and be in a better financial position.
I'm thinking about Randy, who is buying a rental property, not because he wants to make money off of it, but because he knows that if he doesn't buy this rental property and rent it to his son, that they're going to move halfway across the country and he's not going to see his grandkid as frequently as he wants to. And so he just went to his life insurance cash values. He borrowed the money out and he bought a house. And now he can comfortably, charge his son a rent rate that is compatible with his income as he's growing his business. And that money just goes back and restores the cash values in his policies so that he can use it again. And he gets the joy of having his grandson so close to him.
Infinite banking definitely gives you options.
Real estate can be a great investment, but it's very important that you weigh the pros and cons and make sure that the pros outweigh, not just outnumber, but outweigh the cons to make sure it's right for you.
If you are investing in real estate, you need to have plenty of liquid savings to cover extra expenses, because extra expenses do happen and often not at the most convenient times. I know a lot of real estate investors who are cash poor, but with the infinite banking concept, it doesn't have to be this way because you have a tool to build liquidity and to keep your cash working for you while you build that liquidity.
Come back next week when we explore why people find infinite banking so desirable, right here on Wealth Talk.